Yo, what up guys? How are you guys doing? Another market review. We're gonna focus on NASDAQ today. I'm gonna be reviewing price action of the 18th. So yesterday's price action. Today's price action, maybe I will review it this weekend, but let's focus on this one. So I was looking at NASDAQ to go bearish longer term, but there was a scalping opportunity for a buy presented during the AM session. Reason why, always look at the 8:30 opening price, right? Where are we in the 8:30 opening price? We were below it. We were in deep discount. One sell side liquidity has been rated. It went down. Sort of broke this structure up here, so I was eyeing up a buy in this fair value gap, which I entered. I did not like how price was delivered up at all, so I closed break even on this one, and I'll show you in a second. So I waited for another opportunity. I waited for another sell side liquidity rate, which happened. Then price went up, broke this short-term high up here. So we can draw out this in our light bulb, right? So break of structure. It did not go into any fair value gap because there was a tiny one over here, but it never came over there. So I waited for another fair value gap to get created, which happened over here, right? So over here was the fair value gap which got created. Then I entered over here, which was a logical place. I had a really tight stop loss. Obviously, I like when I have a really tight stop loss, I don't use the same risk. I actually lower the risk because if the RR is that much greater, you can reduce your risk. So if it's a loss, you will lose less, and you should always aim to be losing the as little as you can, right? So targeting 8:30 opening price again to return back into there. Price went all the way up here. I went break even because it was about to take buy side liquidity, and it was all more than halfway my target, so I felt like it should not return back into this area anymore. It went really deep and took me out break even again. So 2 break evens, which is fine. And eventually it ran up a little bit higher too, and taking out this buy side liquidity up here. So this one got taken too. And then eventually we should drop, right? So the next day we are dropping, which is to be expected. It is to be expected. So let me drop a quick screenshot for you guys. Right, so this is the price action, right? This was my MetaTrader. You can see I entered over here in this gap, right? And then I closed manually. I entered another one over here. And then I saw it instantly reject, and I was like, okay, this doesn't look like it wants to go up. So I closed it, waited for another one, bought in this fair value gap, right? So it dipped into it and it went up, and it kind of bounced up and down, but I entered when I saw it dip into it. But yeah, sometimes if you market execute, if price just goes up like it's in a slight second, then you enter on a little higher position. So that's why I did not enter in the gap, even though I wanted to. Then on my MetaTrader, you can actually see its equal highs. So I went break even, and then it ran deep, and with the force it came down, it slipped me a little bit below my stop loss break even. So lost a little bit over here, but it's nothing much. So yeah, those were the trades for yesterday. Hope you find this insightful, right? Always wait for a sell side liquidity rate, then a break of structure, then look for your fair value gap to take an entry of, and target logical levels of price, right? Always logical levels. So external range liquidity, right? Above these highs, partial above this one, partial above this one, and probably full close above this long-term high up here. So guys, if you like this video, once again, hit that like button, subscribe, comment, everything, right? And we'll speak in the next video.